Now you have discussed the section 80 various provisions in detail. So learners have now a wide idea about what are the deductions that can be claimed from the gross total income. Besides, section 10 also gives some kind of exemptions which are exempted ab initio, that they do not form part of gross total income. But once it is included in gross total income, the deductions can be availed from under section 80 C to 80 U. And Sri Rachita Saraf has already discussed in detail the various sections, and learners should advise the clients as well as they can also take advantage of various sections given under 80C to 80U. Now, there are companies who have taken full advantages of tax exemption, tax deductions, and then some companies we call it ZTC, zero tax companies. These companies show a positive book profit, but because of availing of various sections given under the Income Tax Act, their taxable profit is zero. The Finance Act 1987 first introduced the concept called minimum alternate tax. And when P. Chidambaram was the finance minister in 97-98, he introduced a section 115JA whereby a percentage of book profit is treated as taxable profit. So now I request you to just elaborate on this particular term, minimum alternate tax.
Definitely, sir. Minimum alternate tax is also called MAT. Let's first understand how tax liability is computed under normal provisions, and then we will understand how it is computed under MAT. So, computation 1 is under normal provisions. Under normal provisions, we will talk about 7 steps of computation. Step 1 talks about taxable income, which is arrived at under normal provisions. Step 2 is the income tax that you charge at the rate of 30%. In case it is a foreign company, then the slab is 40%. Step 3 talks about surcharge, if any, which has to be added to the rate of 30%. Step 4 talks about step 2 plus step 3. Next is step 5, which is HSEC or cess, which is at the rate of 4%, which we will add on step 4 amount. Next is step 6, which talks about the tax rebate under section 86, 90, 90A and 91, and finally we arrive at step 7, which is step 4 plus step 5 minus step 6, which is the tax which is payable, and this figure cannot be negative. So, under normal computation, under normal provisions, we have done step 7. So, we have done from step 1 till step 7. Let us move to computation under MAT. Under MAT, we will start with step 8 and end at step 13. Step 8 says what? It says that you have to find the book profit under MAT. Now, what is book profit? When we make the PL for a company, profit and loss account, we arrive at a net profit. MAT lists down certain additions and subtractions that you have to do on the net profit to arrive at the book profit. So, step 8 talks about arriving at the book profit under the MAT provisions which is given in the law. Next is step 9, which says that you have to apply the rate of 18.5% of tax on the book profit that you have arrived at step 8. Next is step 10, in which similar to step 3 you add surcharge in step 10. Step 11 is then finding out the total amount, which is step 9 plus step 10. Step 12 here, next step corresponds to step 5 of the normal computation under normal provisions, which is adding the SHEC and EC cess, which is 4% on step 11. Under the normal provisions, under step 5 we added cess on step 4. Similarly here on step 12 we will add cess at the rate 4% on step 11. After step 12 we arrive at step 13, which is the step which is our final step for MAT computation, which is step 11 plus step 12. So, this is your computation of tax liability under both provisions, which you have to do for any company. So, while you are calculating your tax liability, you will arrive at step 7 also for the same company and arrive at step 13 for the same company. And the tax liability of that company will be step 7 or step 13, whichever is more. Therefore, MAT under 115 JB will be applicable if the tax liability of a company under normal provision is lower than 18.5% of the book profit. And what will be the effect of this applicability of MAT? Effect will be that the book profit shall be deemed to be the total income and 18.5% of the book profit should be deemed as the tax liability. Now, this was all about MAT under 115 JB, but there are exception to MAT provisions. Three main exceptions to MAT provision are as follows. Number 1, the income of a shipping company is subject to the provision of tonnage income and not under MAT. Number 2, income which accrues and arises to a company from life insurance business would be referred to in section 115B and not 115 JB. And final, in case of a foreign company where its total income comprises solely of profits and gains referred to in section 44B, 44BB, 44BBA and 44BBB, those sections which are applicable to only a foreign company, such cases will not be applicable to MAT. So, these were the exceptions for MAT. Last topic under MAT is carry forward and set off of tax credit. It says that the amount of tax which is in excess of step 13 over step 7 will be carried forward and set off in future years when tax becomes payable under the normal provisions. Here the time limit for carry forward of tax credit under section 115 JB is 10 years up to assessment year 17-18, which has been enhanced to 15 years from assessment year 18-19. I hope you have understood the provisions of MAT. This was all about MAT versus normal computation.
So it was a very interesting discussion on a complex topic of computation of income for companies. We have learned that is how income is computed for companies, what are the different provisions and what are the sections, that is deductions that can be claimed under different sections of 80C to 80U, as well as Sri Rachita Saraf has also given a glimpse of the minimum alternate tax, that is when the tax is charged even if the taxable profit is 0. And she has also highlighted the carry forward and set off provisions and the discussions and example which we have done on carry forward and set off provisions. We think that learners should have a very fairly good idea about the gamut of computation of income and tax liability of companies. Thank you very much for coming, and we hope that we will get again your insights in the future episodes.
Definitely.